Good evening. This is Ken Long from Tortoise Capital with a review of some of the auto framer and regression line fractal framework candidates for June 30th, 2014. So we're just going to take a look at a handful of these symbols from the daily report. Some of these we've been trading for a while now. They've been in extreme conditions and are continuing to work. So we're going to concentrate on the ones here in the Dow 30 that are extremes above and below their own 270 regression line. So we're going to take a look at some of those. Okay, the first one to look at is Cliff. That's one of our favorite mid-cap trading targets. This one is well below its 270, which is sloping down. These are all daily charts now. So the pink line is the 270 regression line. This ribbon-looking gray area is a 30-period Bollinger Band, plus or minus 1, formed on the regression line itself. It acts like a noise channel or a noise barrier. So we'd actually have to see price get above, in this case, about 21, to really think that this downward trend line from 2 time periods higher has really broken. So that's the 270 regression line. The green line is the 90 regression. Black line is the 30-period regression line. Blue is the 10. And then this orange ribbon is a 2-period Bollinger Band, and the price line is the black line inside that gives it that 3-dimensional quality. So we entered CLF on a low-risk trade idea today. We had a swing low, and then a higher swing low. The distance from this regression line 10 up to the 270 formed an extreme here, so we kind of like this. It makes a new high above this little hump, is where we bought it around 15 today. You could play that with a 90-cent or $1 stop at this first red line, or $1.50 at this red line. You would want to be short not later than a failure through 1370. You could consider going short here at the red line at 1410. You might also consider going short if it broke below the 90-period regression line as a resumption of the primary trend downward. But we're looking for a price target up here around 18.90. It would have to get through a couple other price levels here along the way. I'd probably draw them like this as reasonable price targets on the way up. So if I saw hesitation at either of those, I'd be willing to take a profit from there, but this looks like a low risk idea. That looks like about 4 or 5 to 1. This is Boeing, and this is a trade frame that we're putting on. We had this little bump here and then sold off and settled right at 127 today at the close. And so what I'm going to do on this one is if we get more of a failure tomorrow, then I'm willing to take that short from here. With the target down here at about 120, 180, which is the support level. But if it goes higher, I'm willing to, if it takes out yesterday's high, I'm willing to get long on this about 128.80, and I'm looking for like an intermediate price target here at the 90, and if that succeeds up here at about 140, which is a return to the regression line, I would also take that target here. If it got to, say, 137-ish and started to hesitate, I would certainly take that one. So let's put a little target on that one. So that's our trade frame on Boeing. This is one on Visa. I like this already. It had a low and then has started to already turn the 10 going higher, so I'm really trying to play this move back to the 270 regression line. That's the price we're looking to get. I like the fact that we've had a series of higher lows here. So there's nothing wrong with that formation. That's a nice low risk move. Here's one in Pfizer. Entered this one today at 29.68. with a stop here. I like that it's got a higher low. And now that we're playing for the distance from the 10 back to the 270 at 31.25, that's about a 4 or 5 to 1. This one is a trade frame in either direction. In UTX, you can see that we've got this oscillating channel thing going on here. It would not surprise me to see that fail all the way down here to 114 before that 10 were to move, because we've seen that action here and here and here. So if it got this far, it wouldn't surprise me. I'd be willing to trade it from 115.5 down to 114.30. We're in the yellow zone right here. But if it gets higher above this yesterday's high at 116.70, then it looks to me like our target would be 120.90. And then again, we're looking for, this wouldn't surprise me to have it stall here or here at the edge of the noise channel. So either one of those price targets, if it were to hit and stall, we'd be willing to cash that as a very nice trade. So this is one that we're prepared to go in either direction. Here's one in Cisco. Had a sideways quiet channel looking formation over in here after all this. So I'm going to let it get out of that channel and decide which way it wants to go. If it breaks north at 25, I want to be long, and then it's free and clear, no resistance overhead in the foreseeable past. But if it breaks down below 24.50, then it's a long drop here to 23.50 and then 22.50 back here at the edge of the 270. The reason this is favorable on the long side is that it just broke out here. You can see that the 270 was below its noise and now crossed, and it's just starting to hook back up. So this looks very favorable. The 90 crossed way back here in this area. So we like this first leg up. I'm willing to estimate that it could have another leg of this size from 22.50 to 25. So another $2.50 on the upside. This could get to 27 if we see one more leg up. So that's a trade frame. I'm waiting for Cisco to break out of this sideways quiet channel here, but it looks to me like it's up. In Intel, we've been playing this one for a while. Here's one where, again, you notice that the crossover occurred back here. That's where the 90 and the 30 and the 10 all crossed over the 270, and so this is early. And this was what Cisco looked like on that first leg up, and then it broke out to the upside. Well, that's what we're hoping to see in Cisco. Meanwhile, this one has voted up twice. You have you have this nice move, you have this nice move, and so we could expect another move of that magnitude going up. So I like this one at 31 with a stop around 30 on a swing basis. If it were to fail below 30, then the target on the downside is 27.50. But this is we're two positions into this one already. We bought this breakout of the last sideways quiet channel here. Let me move that out of the way. And then that continued to work. So now we buy the second one here. I like a stop right in here now, so that the first position pays for the second position. So we're not going to lose any money on that position there. So that's Intel. That one is free and clear to the upside. Here's one in Coca-Cola. I really like the breakout from this base that occurred here. Our first position was at 41.25. Bought the second one today at 42.36. We've adjusted our stop up here to just under 42, about 41.80. If it were to break down below 40.75, the target to the downside is 40. But this one feels like it's up. We've already had one nice move up already. So if we take this as the size of the first leg to the upside, and then we clone that, we should certainly be able to see 43. That's the size of that move. And so we're thinking, 43 is a reasonable upside target, and I would I would, if I got hesitation there, I'd be willing to cash both. So again, we're using this little symmetrical approach to the size of the move, the size of the excursion above the 270 regression line. And now one that we've been working in silver, this was a washout pattern way back here, and we've been managing it all the way. We've got a second position when it cleared the cleared this congestion zone here, is where we brought the second position at 1930, and now we're sitting at 2025. 2 positions in. I'm looking to get 2075 out of this one, and we've had one nice move already above that 270 regression. So we've had this move to the upside already, and if we can get another one of those, that puts us right up here at 2075. So you can see the how we're using the symmetrical approach here to estimate reasonable upside moves. So 2075 looks like it's within reason here. All right, so that's a quick look at half a dozen symbols in the that are continuation patterns and this regression line fractal format. Trying to take advantage of continuation plays and some trading geometry here with our daily swing trades. So it's Ken Law from Tortoise Capital, June 30th, 2014. Keep your powder dry and your risk measured.